Hey, my friend, welcome back to another video. I just got married and I'm ready to be back on YouTube and make some money with you guys and hopefully make you guys a lot of money as well. Okay, so take a look at the portfolio. You see we are doing well. 1 year performance, 100% gainer, and year to date, 63.2%. Not bad at all. Not bad. Not too shabby. Not too shabby. Okay, actually, before we get started, I want to invite you guys to join the school community where basically we'll have more individualized attention, live trading calls. You'll have the ability to ask me questions anytime, any trade recommendations, things like that. See what I'm doing in real time. I post my trades in real time because sometimes it takes time to get out these kind of videos. So yeah, more direct access to me. And actually the first 50 people that join the community, it's going to be free. After that 50 people that join, I'm going to start charging for the community. So the first 50 people get in for absolutely free for life. And then basically, after that, you just got to pay for it, which it's still not a bad deal. You're going to make a lot of money. Whatever you're going to pay for the community, you're going to make so much more money than that. Trust me, it's insane. I can't guarantee, obviously, just not financial advice, of course. I'm just a guy on YouTube. Okay, so let's take a look at Celsius Holdings. Okay, not a whole lot of people are talking about Celsius. I think it's a great company with a bright future. This company is well researched. They had a recent acquisition, and their recent earnings on August 6th or 7th, it had the earnings quarter had the full earnings from the Alani Nu acquisition, which added a lot of revenue and income to their earnings. And so Celsius is a great company. One thing I like to do, a little Peter Lynch style inspiration, is when you go to the gym, you look at where they sell energy drinks. Celsius is always like understocked, like there's always more Celsius taken out. So that's an indication of high demand. Also in Costco, when you walk through like the energy drink aisle, like when you walk through like the main doors of the drinks, at least in the Costco nearby to me, you see big Celsius stands. You see Alani Nu. They're taking up so much shelf space, and the only reason is because they're selling a lot. They're also taking a ton of market share. So Celsius is a great non-tech related company that we can be selling cash secured puts on. So I'm going to go to cash secured put, and let's see. I'm going to sell for the 19th. Okay. So if you don't know what a cash secured put is, then you're in luck because this is probably going to change your life. Okay. So let's see here. So let's say you like Celsius. Most people would just, I don't know, buy the stock, which is totally good. If it goes up, you're going to make a lot of money, and it's definitely going to go up, in my opinion. But let's say you want some cash flow. We're trying to make some cash. Okay. Now I want to get a discount of Celsius. I'm going to put basically a conditional buying order. Okay. And that is selling a cash secured put. So I like to think of it as a conditional buying order. So if the conditions are met, if Celsius Holdings expires under, let's say, $57 as opposed to $59.80, if it expires under 57 by September 19th, which is 23 days out. Now you can set any date you want. You could set for 9 days out, September 5th. You can go out to 842 days out, right? December 17th, right? But for today, we're going to do about roughly 3 weeks out, 23 days, 57. Now, if it expires under, that means we have to buy the shares at 57, okay? Which is a discount to the current price. Now, we are going to get paid right now at the current time of me making this trade, $139 for putting on this trade. So that is the premium. That's called the premium. So what we need to do this trade is we need the cash in our account available to put to be as collateral to be able to buy 100 shares at $57. So now 57 times 100 shares is going to be $5,700. Okay? So 57, and right here we have a zero point 0.3 delta, which is ideal actually. This is great. So 57, I already have one position there and one position of this. I'm going to do another position. So if I'm going to click this button using Robinhood, $139 of premium, $1.39 times 100. Now look at this. Right here we have $57. If the stock goes to 57, we still got our premium, our 139. Because we got paid the premium, if we go down, the 57 strike minus our premium collected, our actual break even would be 55.61. If the stock goes below 55.61, we now start to enter the territory where we theoretically lose money on paper, right? So we didn't actually lose money. We basically just acquired the shares and now we're in a paper loss, right? So this strategy has to be done on companies that you want to own for the long term. And this company is very well researched on my end. In my opinion, I think long term it's going to 100 plus, 200 plus. It's taken market share. It's a really, really solid company. And the trend in general is just people are drinking less sugar. They want healthier options. It's trendy, especially with Alani Nu. It's good flavors, low sugar, good stuff, and they somehow managed to capture so the energy drink market captured like the gym goers, and it's like trendy, and it's like, who wants to drink a Monster anymore, unless you're like a truck driver, or like I don't know, like who drinks Monster? I don't know. Let me know. So anyway, let's get back to it. So selling cash secure put, I'm going to go continue. We have one contract, high likelihood. Let's see if I can push this up just a little. Oh, no, it's fine. Let's just leave it at that. Okay. Review order. $5,700 collateral. I'm going to get paid $139 sitting on my butt doing nothing, which is kind of crazy, right? Going to submit. Got filled. So now at my total, I have 2 contracts available because I already had one. That's a done deal. $140, dude. Imagine you're making $25 an hour. That's like 6 hours of work sitting on your butt doing nothing. I'm basically almost making as much money selling cash secured puts and doing the wheel and, doing investing, almost as much as my actual job, which is crazy, right? And as the portfolio grows in value, it's only going to get more insane. So this is just the beginning. And it took me a lot of years to get to this point. Made a lot of mistakes along the way, learned a lot of lessons. This portfolio, had I not done certain things, could have been at hundreds of thousands of dollars. But you can't, you can't cry over spilled milk. You just have to take everything as lessons and a learning experience, because at the end of the day, those lessons and mistakes end up being the foundation for the future. It ends up being your foundation for you having experience to draw from. So, which is going to make us way better investors and make us a lot more money in the long run as well. So, yeah. And then let's take a look. So we have 8,800 left to play with here. There was, let's see. You know what? Kava. Yeah. All right, and now what I'm going to do is I need some more exposure to SoFi, okay? So SoFi is a great company. They've got a bright future. They were just around $26. They're sitting right at about 25 right now. I'm going to sell a couple more puts on SoFi. They are just creme de la creme, okay? Let's see. I need some more SoFi. It's my thesis is that this stock is going to 100 plus over the next few years. So whether you buy it at 22 or 25, it doesn't really matter in the long run, okay? So, but in the short term, we do want to play that balance of being, collecting premium and then not buying at too high a price, because you want to have that buffer. You want to have less volatility in your portfolio. You want to price it for the downside risk. So we want to get it at a discount. We don't want it at 25. We want it, let's say, at 23. That's roughly a 3% return, 0.24 delta. And this is a 0.2 delta. SoFi is a stock that you just want to own it. You want to own it. And yeah, I'm going to go for a 23. My average cost on the shares that I do have is about 14. So now, because my average cost is 14, it's okay to go a little bit higher on the cost basis. Let's see, just in case. Let's see. Okay, so 23. I'm going to sell a couple of these. Let's go 3. Okay, so that's 176 bucks sitting on my butt doing nothing. Now, if I get assigned, totally happy to get assigned on these shares, okay? Why is that? It has a bright future. They're profitable. They're making a lot of money, and they own the infrastructure for a lot of banking things. They don't have to outsource. They don't have to outsource a lot of banking. Basically, like a lot of companies, like, I don't know, Robinhood, they don't have a bank charter. So they have to work with other banks in order to like do things like the credit cards, or maybe in the future, if they want like people to like deposit money, like into like a debit card or something, like they need to work with other banks. SoFi, they're their own bank. They have their own bank charter. So they get the full spread of all the banking stuff. So they're a big infrastructure play. They have a ton of growth. They're attracting a lot of new members every quarter, roughly 800 to 850,000 members per quarter. Crazy. They're like almost 12 or 13 million members. That is the best indicator of future growth, is just getting new members. And there's a lot of buzz. And again, Peter Lynch style investing. You hear people are, getting SoFi banking because they have good APYs, they have good loans. So you try to see what people are actually using in real life. So SoFi is a great company with a bright future. And yeah, so do your own research. Of course, this is not financial advice. I'm just a guy on YouTube. All right. So yeah, let's sell 3 contracts at 23. Pretty good premium. Bada bing, bada boom. Okay, collateral, 6,900 bucks. Perfect. And let's see this number. There we go. We're at 2. And what we're going to do, we're going to finish this off with AMD is another really, really, really good company with a bright future. Now, right now, I only have 2,000 left in my account and 166. AMD, another, yeah, it's going to be a really good performer long term. What I'm going to do is I'm going to look at AMDL. Now, this one, anytime you have a leverage kind of product or position, you want to keep position sizing just small. This is not something you want to use an outweighted amount of your portfolio in. So what I'm going to do is AMDL, which is a 2 times leverage, essentially, and I'm going to go very conservative with this one, especially, and I already have 2 contracts, one at 1050, one at 10. You'll see that's a 4% return, and this one's a 6% return. Basically, if AMD goes down 1%, AMDL goes down 2%. If it goes up 1%, then AMDL goes up 2%. So I'm going to go very conservative for a position like this, just to have a little bit of that skin in the game and have a smaller portion of my portfolio have a good return compared to the money. So let's see. If I do a $9 for 23 days out, that's about a 1.5%. 950. I'm gonna do the 10. I'm gonna do the 10. Let's see. We got a 4% return on 10. But again, my portfolio size compared to this position, it's very small. Okay, so that's a 4% return on about $1,000, right? So you're taking a little bit more risk because it's a leverage position, but you're getting a 4% return. So if you only have $1,000 and you like AMD, this is a great play. And let's just check the delta real quick. 0.26 delta. AMD is at 166. I mean, I think it's a great play if you only have $1,000 to, yeah. So we'll see what happens. Okay, so yep, got filled. It's a 4% return. Now imagine that. Imagine this. Imagine you're working at Chipotle. You make $20 an hour. You manage to save $1,000 that you say, you know what, I want to put this money to work. I want to invest. Like, this doesn't seem like a lot, but if you made $40 and your hourly pay is $2, that's 2 hours of your life. That's 2 hours of work for a 23-day, waiting period, right? Now, it doesn't sound like a lot, but that's huge, right? Because the feeling, it's not the amount that matters, it's the fact that you made money detached from your time, and that's important. That's a life-changing mentality. When you can make money detached from your time, right? Now, if you only have $1,000, you're taking an outweighted risk for how much money you have. All your money is in one position, but you get compensated for the level of risk that you're putting, right? So this is not financial advice, right? Don't just do a trade because I said, but this is just, trying to shape the mindset and, what you could do, right? But like for me, for somebody who wants to take a little bit more risk, it's not bad. 4%, 23 days. It's like a 50% return in a year, right? It's like, that's insane, right? But what's more important than the amount is the muscle, is the philosophy, is the system, okay? So if you want to go deeper with this kind of information and have a community of like-minded investors that are making passive income, selling puts, covered calls, investing, right? Have direct access to me. Join the link in the pinned comment. You're not going to want to miss it. The first 50 people get in for absolutely free. And then after that, it's going to be a paid community. We're growing. People are having a good time. We do live calls every week. It's just a good time. And, the more people you can surround yourself that are learning this kind of information, that are making money passively, the more it's going to become a part of your life, the more you're going to take investing seriously, and it's going to be a really good thing for your financial future. So once again, not financial advice, just again, YouTube. We'd love to see you in the community. We'll see you there. Hope you got some value out of this video. Please smash the like button if you enjoyed the video, and we'll see you in the next one. Thank you so much for hanging out and making some money.